Hello, welcome to my channel today. This is King's Tutor. It's the first time of joining us. Thank you for liking this video. Thank you for joining us. And if you're a returning subscriber, thank you for your support so far. Now, we started on company accounts weeks ago. And we saw different introduction and different aspect of company account. Now, if you have not watched that video, I will encourage you to watch that. I'll drop the link here or in my description, okay, so that you go through that, okay. Now I want to solve a practical question that relates to what, to company account, how we can see that, how we can solve it, okay. Now let's see this question that relates to company account. Now it reads thus, showing you on the screen. It said the following trial balance was extracted from the books of the King's Tutor Nigeria Limited as at 31st December 2021. Okay, so it said issued and fully paid 20,000 ordinary share of 1 naira each. The amount is 20,000. Share premium 10,000. General reserve 8,000. Profit and loss account 3,000. Salaries and wages 5,000. Discount, you see these two discounts is there, the one on the debit and the one on the credit, indicating discount allowed and received. Also, we have carriage inwards. Then we have purchase and sales. Okay, so we have purchase and sales as 45,000. And the next one is stock. 1st of January 8,000. Now we have carriage inwards 560. Now we have loans 24,000. We have interest on loan 1,000. We have provision for bad and doubtful debt 2,000. We have preliminary expenses 12,000. We have motor vehicle expenses 1,800. Director salaries 6,000. Repairs to premises 250. Rates 1,600. Premises at cost 20,000. Motor vehicle at cost 23,000. Plant and machinery at cost 25,000. Provision for depreciation. We have plant and machinery 2,500. Debtors and creditors, we have 12,390 and 8,000. And we have sundry expenses 3,500. We have cash in hand 300. Okay, so we also have cash at bank 4,000. We have returns, both returns inward and outward, or stated there. We have it as 240 and 360. Okay, and the total amount there is 170,000 as the total cost. Now, the additional information, it says stock at close is 12,500. Expenses unpaid, we have motor expenses 200 naira, insurance 450 naira, sundry expenses 400 naira. Now we have prepaid expenses rates 320 naira. Now also have sundry expenses 250. Now, provision of bad debt is to be increased to 280, 2,800 naira. E. Part of the premises is sublet at 2,400 per annum. F. Monthly salaries and wages billed 400 naira. G. Bad debt at the 1st December 600 naira. H. Loan interest is 5% per annum. I. Provision for depreciation on the straight line method. Now, the first one, premises 2%. Plant and machinery 25%, and motor vehicle 10%. Now next one we have write-off preliminary expenses. Now the next one we have transfer to general reserve 5,000 and 5,000 to revenue reserve. Required to prepare the trading profit or loss and appropriation account for the year ended 31st December 2021, and B, a balance sheet as at that date. Okay, so that is the question so far. Now let's solve. Now we have seen this. I told you whenever you want to prepare a final account and have an adjustment, ensure you start with additional information. Adjust the item there. Okay, and we have done that before. If you have not seen that video, how to treat adjustment, every aspect of adjustment, check in my description or check up here. I'll drop the link, okay? Ensure you watch these videos I'm recommending before this, okay? Because it will help you to know how to adjust, okay? Now let's start. Now, the first item there, now the way we are going to solve this is as we solve each item in the additional information, I'm going to show you where it will be posted in either the trading profit or loss or the appropriation account and the balance sheet, because every item under additional information must appear 2 times, okay? So now let's start with the first one. Now the first item under additional information, they said it is stock. Now let's write the name of the owner. Said is the King's Tutor. Okay, the King's Tutor Nigeria Limited. Now it's the adjustment. That's the first item I want to do. So the first item in the adjustment is stock. So we have stock. So we have stock, which is 12,500. So stock is going to 2 places. The first one is a trading account to go up as closing stock, while the next place it is going is the balance sheet. Is the balance sheet under current asset. Okay, so that's the first item. The next one is say expenses unpaid. Expenses unpaid means accrued expenses. Okay, and let's see that. Said expenses unpaid. The first one is a motor expenses. So say the motor expenses. Okay. Now we're going to check the amount that was paid in the trial balance. How much was paid there? Now if you check in the trial balance, you'll see the motor expenses, the amount paid there is 1/8. Now all accrued unpaid we have to add. Okay, we've treated this adjustment before. Check in that description. So we said add unpaid. Add unpaid of what? 200. That's what is in the additional information. So we have 2,000. Okay, 2,000. So this one is what will go to balance sheet as current liability, and this one is what will go to the profit or loss as what? Expenses. Okay, so that is the third one. No, still under expenses unpaid. We have the next one, which is what? Insurance. Insurance. They say insurance was paid 450. Now let's check in the trial balance if there was any insurance. Okay, there is none, so we'll just use that item in the additional information. So the amount in the additional information as insurance, that is what will go to both profit or loss and the balance sheet. Okay, now the next one is prepaid sundry expenses, still under unpaid. So say sundry expenses. Sundry expenses. Now sundry expenses, and let's check the amount that was paid in the trial balance. So said amount paid in the trial balance is 35. Now add unpaid, it is what? 400. So 35 plus 400 gives us 3,900. Okay, so it is this 39 that will go to profit or loss account, and this one in additional information, that is what will go to what? The balance sheet. So we are posting what will go to which account. So that's for sundry expenses. Now the next one, they said the third one, prepaid expenses. That's in the additional information. Now prepaid expenses. Now for prepaid expenses, the first item there is rate. The first item there is rate. Okay. Now we're going to check the rate in the trial balance, how much was paid. Trial balance, how much was paid is 1,600. 1,600. Now prepaid, you less. So we'll say less prepaid or payment in advance. So the prepaid, he said it's 320 in the one in the additional information. So 16 minus 320 will give us 1,280. So it is this 1,280 that will go to profit or loss, and this will go to balance sheet. Okay? So the next one is sundry expenses again. So we have sundry expenses. So we have sundry expenses. Remember, we have sundry expenses, both accrued and in prepaid. So now in this situation now, for sundry expenses, we've already adjusted here. So we will take the final total as what we use. So it will now be the adjusted balance, which is 39. Now they say prepaid. They say less prepaid. Now the prepaid is how much? The prepaid is 250. Okay, 39 minus 250. So we have 3,650. Now this is what will go to the balance sheet, and this is what will go to the profit or loss. Now this is the latest value for sundry expenses. This all go to profit or loss. Okay. Now the next one said provision for bad debt is to be increased to 2,800. Now we have for provision for bad debt. Now provision for bad debt. Now we have different ways they can ask a question like this. We have done that before. Please ensure you watch that video. Now we have different way. Provision for bad debt, they said is to be increased to 2.8. So it means let's check in the addition in the trial balance if they already have provision for bad debt there. So they already have provision for bad debt there. Now we can call that the old provision. The old provision is 2,000, the one in the trial balance. Now they said we should increase it to 2.8. So the new provision is 2.8. So the difference is 800. And the difference is what? An increase. An increase. They said increase it to 2.8. So what are they topping to the previous one? 800. So it is this 800 that will go to profit or loss account as expenses because it's an increase. Then the new provision is what will go to the balance sheet. Okay, so that is that for provision. The next one is they said part of the premises is sublet at 2,400 per annum. Part of this premises is sublet. Sublet means a chance renting an item or a property that was previously rented, okay, by a tenant. So to sublet the premises, now we have premises sublet. That says premises sublet. Premises sublet, it's a rental income anyways. So part of the premises sublet at 2,400 per annum. So it is 2,400. The fifth one. 2,400. Okay? Per annum. So this amount is what will go to both profit or loss and balance sheet. Now the next one there said monthly salaries and wages bill 400. Monthly salaries and wages is what? 400. So if we want to calculate that, now monthly salaries and wages. Now if you said for 1 month is 400 times 12. 12 months is in 1 year, that's per annum. So 400 times 12 will give us 4,800. Now let's check in the trial balance if we have salaries and wages that was previously paid. Okay, so we have there salaries and wages as 5,000. So, but they say the monthly salaries and wages that they were supposed to pay is 400 for 12 months. That is 48. But they've paid 500. It means they paid 1 month ahead. That's prepaid. So, let's say the trial balance. The trial balance is 5,000. Okay? Now what's the difference? 200. And this difference is a prepaid. This is what they are supposed to pay. Because they said the monthly salary average is 400 for 1 year, which is 12 months. The other one is interest on loan. So they collected loan and they have to pay interest. Okay? And they said the interest is 5% times the loan amount, which is what? 24,000. Okay? So 5% on 24,000 will give us 1,2. Okay? Will give us 1,2. Now let's check in the trial balance if there's interest on loan. So in the trial balance, there's interest on loan there. And the amount is what? 1,000. It means they paid 1,000. But what they are supposed to pay is 1,2 as interest. So it means they are owing what? 200. 200 is owing. So this amount will go to the balance sheet as accrued, while the amount that we calculated is what will go to the profit or loss account. The profit or loss account. Okay, so that's interest on loan. Now let's see the next one. It says provide for depreciation on a straight line method. Premises 2%, plant and machinery, and motor vehicle. So let's provide for depreciation. Now this question have many adjustments. Okay, now we have depreciation. Okay, so for premises, it is 2% on the cost of depreciation, which is what? 20,000. So 2% on 20,000 will give us 400. So this amount will go to both profit or loss and the balance sheet. Okay. The next one is plant and machinery. Plant and machinery. Now the amount there is 25%. So 25% on the cost of the asset, which is 25,000, will give us 6,250. Now, if you check in the question, you see provision for depreciation for plant and machinery. So that provision in the trial balance, if you check there, that amount there is 25. Okay, so the accumulation is what goes to balance sheet as 8,750. Why the one you just calculated is what goes to what? The profit or loss. Okay? So, now the next one is motor vehicle. Motor vehicle. And motor vehicle is 10%. 10% on the cost of the asset. So 10% of 23,000 will give us 2,300. Okay? Which is for profit or loss and also balance sheet. Okay. Now, the next adjustment said write off preliminary expenses. Now, if you check in the trial balance, you will see preliminary expenses. What is preliminary expenses? These are expenses you incurred in trying to get a feasibility study for the existence of the company. So we should write it off as 12. It was 12,000. So to write it off. Okay, so it will post it at the appropriation account. Why the last part is transfer to general reserve 5,000 and 5,000 to revenue reserve. Okay, so in our general reserve, we already have an amount in the trial balance there. Amount in the trial balance, it's 8,000. 8,000. So in the additional information, the sales should transfer. That is 8,000 plus 5,000 will give us what? 12,000. Okay. So it is the one in the additional information that will go to appropriation account, while the one in, that's the total, goes to balance sheet. Okay? While the last part is, let me do that here. The last part is the revenue reserve. Okay? Revenue reserve. Now let's check in the trial balance. There is nothing like that there. So we're just transferring the 5,000 to both appropriation and balance sheet. So with all this we have done, we have simplified the question. So we have posted where it should be. Where it should what? Should be. Okay? Now, take out a piece of paper to write down all these items because we're going to need it. Okay? You can pause the video to write out all this. So when we get to where we need, we are going to what? To take it so that you follow what? Sequentially. Okay? These are stock, expenses, insurance, prepaid, provision for bad debt, premises, and all that. And let's prepare the account, the actual prepare. What is the trading profit or loss account? Now, let's prepare that. Okay, now if we look at our trial balance from the question there, now let's start from the items that we are given. Okay, that is supposed to appear in the profit or loss account. Okay, so the first item there, you'll see it is stock. That is supposed to come here. So write our opening stock, which is how much? 8,000. Okay, the next one is add purchases. So if we add purchases, what is how much? 25,000. 45,000, sorry. So what is 45,000? And if we add it, we have this 53,000. We have 53,000. Okay, so now also check in the question if we have carriage inward. So there is carriage inward, so we add it also. So add carriage inwards. So carriage inwards from the question is 160. So we have 53,160. Now let's check if there's return outward. There is less return outward. So return outward from the question is 360. That's 360. So this minus 360, we have 52,860. 52,800. Okay? So that becomes our cost of goods available for sale. So the next thing is to less our closing stock. So when we less closing stock, we have our less closing stock. And the closing stock is the one in the additional information. Okay? The one in the additional information. And the closing stock is 12,500. Okay? So the closing stock is 12,500. So we have, so this will give us 0, this is 3, this is 0, this is 4. That is 40,300. Okay? So come at the right hand side. It's supposed to be our sales. And let's check in the question, what is our sales? Sales there is 91,740. You see to get out purchases in the trial balance. And let's see if there's return inwards. So let's return inwards. Okay? Return inwards is 240. So we have 91,500. Okay? So from this now, remember this becomes our cost of goods sold. So now this is net sales. This is called net sales. Our sales minus less return inward. So this minus this will now give us the gross profit carried down. Okay? So the gross profit, this minus this, will give us 51,200. So when we add together, we have 91,500. Okay? So this becomes 91,500. So gross profit carried down, we'll bring it down here as gross profit brought down 51,200. Okay? Now this will contain our expenses. Now let's start from the trial balance. The first expenses that will appear. We'll see what is the salaries and wages. Remember, whenever it comes to these expenses, please start checking the adjustment. I asked you to write down so we know which one was actually adjusted. Okay? We know which one was adjusted. So we'll write the adjusted figure that is supposed to be posted to the profit or loss account. So our salaries and wages, the adjusted figure is 4,800. That is coming here. The next one is discount allowed. It wasn't adjusted. Or in the trial balance, that is what comes next. We'll start above. So discount allowed there is 200. Why discount receive? We have discount receive is an income. It is what? 400. Okay? The next item there is carriage outward. Carriage outward. Carriage outward is an expenses. So carriage outward. How much is it there? 560. The next one is loan interest or interest on loan. Remember, this was adjusted, so write the adjusted figure. That is what is supposed to be posted here. Loan interest is how much? That's the adjusted figure that was adjusted. I asked you to write it down. So it's 1,200. Okay? The next one is motor vehicle expenses. Not motor vehicle at cost. This is the expenses. Motor vehicle expenses. We did the adjustment. So the adjusted figure is what is coming here. As what? 2,000. The next one you see there is director's salary. It wasn't adjusted, but it's an expenses. So write director's salary as 6,000. Okay. The next one, we have repairs to premises, 250. Repairs to premises, 250. The next one, we have rates. The next one, we have rates. Rate is 1,280. Okay? 1,280. Rate was actually adjusted. So, rate is 1,280. So, the next one, we have sundry expenses. Sundry expenses. So we have sundry expenses of 3,650. The next one, we have insurance. It was adjusted 450. The next one, we have bad debt. Bad debt, which is 600 in the additional information. Okay, so we'll come over to this point. The next one, we have provision for bad debt. Provision for bad debt. Provision for bad debt. They said the increase. I told you the increase is what is coming here, which is 800. They say increase to 28. So the difference is what will come here. So the next one is provision for depreciation. provision for depreciation. So we did 3 items depreciation. The first one is plant and machinery. Plant and machinery is 6,250. The next one is premises. Premises 400. Why? The next one is motor vehicle. Motor vehicle is 2,300. So if we add up, we have 8,950. 8,950. Okay? So that is all the expenses so far. Now let's see if our rental income, remember our rental income, that was sublet. So rental income is an income, so the amount there is 2,400. Okay, 2,400. So those are the income and those are the expenses. So let's add up the income. Let's see what it will be. If you add up the income, it will give you a total of 54,000. 54,000. And if you add up the expenses part and deduct it from the income, the balance will be 23,260. What is 23,260? That's what? The net profit. So continuation is the appropriation account. After this, we did that in the format. So the appropriation account, we're going to bring our net profit down here. Net profit is 23,260. Now, if you check in the trial balance, you see profits or loss account as profit from previous year. Okay, so the amounts there said profit or loss brought down. The amount there is 3,000. Now we are going to see the items that will come here. Remember, they said transfer to general reserve. So we're transferring to general reserve 5,000. Also, they say transfer to revenue reserve 5,000. Then remember our preliminary expenses. They say write off. Preliminary expenses is 12,000. Okay, so those are the appropriation account. So once you add up here, now we are going to be having an amount as a credit side. That's the only thing that will come to the appropriation. So once we add up here, we'll have, this will give you 260. This is 26,260, and this is not up to. So the balance is what we call retained profit or undistributed profit. Okay, so that's this minus all this will give us the balance, which is 4,260. So this becomes 26,260. Okay, so that is the profit or loss account. Okay, now let's see the balance sheet. Now let's prepare the balance sheet. So it will be statement of financial position as at 31st December 2021. So if we do that, so we have, so in the right hand side, let's start from there. We'll have our fixed asset. Okay, and the fixed asset will comprise of cost, depreciation, and the net book value. So accumulated depreciation, actually. So the fixed asset, the first fixed asset from there is our premises. The premises, the cost there is 20,000. 20,000, while the depreciation is 400. Okay, so our net book value becomes 19,600. So that's the cost for the net book value. The next one is plant and machinery. The plant and machinery, the cost is 25,000. Now, the depreciation is actually accumulated. The recent one that was calculated plus the previous in the trial balance. Okay, we did that. So the total is 8,750. So 25,000 minus 8,750 will give us 16,250. So the third one is the motor vehicle. Okay, so the motor vehicle is 23,000 cost. Depreciation is 23. So 23,000 minus 23 will give us 20,700. So that's the fixed asset. So when we add this, we are having 68,000. And when we add this, we are having 11,450. 450. And this minus this gives us our net book value, which becomes 56,550. Okay, so that's the current fixed asset. Now let's see the current asset. There was no stock that was quoted. If not, it would have been included. So let's see the current asset. At the current asset, the first one is the stock. That's the one at the closing stock. The current asset. So we have stock of how much? 12,500. Why? The next one is our debtors figure. So debtors. And the debtors figure from the trial balance is 12,390. But you remember we have a bad debt in the additional information that they said we should write off. That is 600. So let's see it first. Less bad debt, 600. So 12,390 minus 600 will give us 11,790. Why? Now before we can add less provision for bad debt. Less provision for bad debt. Okay? The provision for bad debt is now 2,800. The one they say we should increase it to. Okay? So this minus that will give us 8,990. So 8,990 is now the new debtors figure. Okay? Another item that will come here is our cash in hand. In the trial balance there, so the cash in hand is 300. Another item that will come here is cash at bank. The cash at bank is 4,000. Another item that will come here is sundry expenses that was paid in advance. Sundry expenses, the one paid in advance. We have the one that was accrued, and we also have the one paid in advance. So the one paid in advance is prepaid expenses. Okay? So that is 250. And the next one, we have wages and salary. Wages and salary. All these are items under the additional information. Okay? Wages and salaries is 200. The next one is rate. The rate is 320. Why the last part is the rental income. That's rent receivable. Rent receivable is 24. So if you add up everything from the net book value down, The total is giving us 85,510. It's just listen to my voice. 85,510 in case you can't see that. So the left hand side is the capital angle. So we'll start with authorized share capital. Authorized share capital. Okay, so they say the issued share capital in the question. In the question, you can see that they say issued and fully paid 20,000 ordinary share of 1 naira each. It means the authorized share capital, we've explained that is what is the total amount of money that is approved for a firm to issue. So we said 20,000 ordinary shares of 1 naira each. So it will give us 20,000. But we are closing this. So what we'll work with is the issued share capital. Issued share capital is 20,000 ordinary shares of 1 naira each. That's 20,000. Okay. Now the next one is our reserve. The next one is reserve. Now reserve, they say transfer general reserve to general reserve, the amount, remember in additional information. So general reserve, we are picking out the total, okay? And the total is what? 13,000. That's 8,000 before plus 5,000. That's 13,000. Why the next one is revenue reserve. Revenue reserve 5,000. Okay, the next one also in the question is share premium. It is 10,000. Well, another one is a retained profit from here. Retained profit as 26,260. Okay? So the retained profit is 4,260 or 26,260. So those are the items for reserve. So let's see another heading, a long-term liability. A long-term liability will only include the loan. Okay, so we have loan there, and the amount for loan is 24,000. 24,000. So that is for loan. Now the next one is our current liability. So you see how we are listing them one after the other. Current liabilities. Okay? And the current liability, the first item will be our creditors. How much is creditor? 8,000. Another item there is the loan interest that was accrued. Accrued is 200. Another one is motor expenses that was owed. Motor expenses that was owed. Okay, is 200. Another one is the insurance accrued. All these appeared under the additional information. Insurance accrued, which is 450, and sundry expenses. Sundry expenses, 400. So when you add everything, it is giving you 85,510. Okay? So it also balanced automatically. So that is how to basically prepare your company accounts, the final account of a company. Okay? So you've seen where we started from. We started from the adjustment, prepared all adjusted items. You see why it is important to start from the adjustment, so that you post the actual value. Okay? Now we went into the trading profit or loss account and also the balance sheet. Okay, so that's how to do that. So Please ensure you like, comment, share this video. Please like this video so I will get to more students, okay? And also comment, okay, which other aspect you want me to treat on. So in the next video, we can see other aspect of company accounts, which might be the issue of shares, how shares are issued, okay? Thank you very much.